All right, guys and gals, it's about that time of day again here, folks. It is that time of day. Time to get back to work here. It's Thursday evening. It's March the 28th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. Remember, I help new traders find consistent, reliable, dependable, profitable opportunities using a simple 3-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is to identify the best of the best opportunities we see setting up for tomorrow. That's Friday's triple threat trading session. And of course, we're going to cover oil, S&P, Nasdaq, gold, and euro in tonight's video newsletter. I'm going to jump in here first tonight on the oil market because, well, let's face it, if it wasn't for Trump tweeting away this morning at midnight, what is he even doing awake that early in the morning anyways? Bottom line is, all kidding aside though, right, President Trump here in the U.S., right, turned to Twitter overnight talking about OPEC. And of course, if it wasn't for that, right, if it wasn't for that bit of a tweet storm overnight here, we would have been right up to that 60 big round number here. So unfortunately, there was a bit of a roadblock or a bit of an obstacle in the way, but we're right back on track here now, fulfilling the mission that we talked about in last night's newsletter. We talked about heading back to that big round number in last night's newsletter, and again, right, with the exception of a little bit of a tweet storm there earlier this morning, right, we are back on track here, right, heading back up to that big round number. Bottom line is, guys, it's a bull market right now on the oil. We've got a nice strong 1, 2, 3 move going higher. And of course, anytime I have a nice big bull market like this, I want to find ways to buy at levels of support. So what I'm doing is I'm finding levels of support. I got my eyes on a beautiful hidden channel here, and I'm looking for a couple different buying opportunities coming in off the low of that channel heading into tomorrow's triple threat Friday session. At the same time, though, it should be no surprise here. This is potentially a very strong short covering rally. If we do see some aggressiveness here from those bears getting out of their positions from earlier on in the month of March, I have a great plan here for us for how we can be buying those very shallow pullbacks if we don't get that deep pullback. So I'm going to talk about the buy side here, both if we go up and of course, if we go lower here on the oil tonight. And again, if we would have got a little pit stop on the way down there, we would be right up. Well, we'd be looking like the S&P and the Nasdaq right now. Over on the S&P tonight, S&P and the Nasdaq, very similar here this evening. Boy, oh boy, I mean, we set this thing up on a silver platter, right, last night, right, having that hidden channel, buying right back up. Bottom line is, we talked about last night, we talked about blending trading ranges. Well, now ahead of tomorrow's triple threat Friday, we're going to be blending channels. I've got a bull market right now. It's very easy to see the market is bullish right now on the S&P. I've got a large channel, which tells me we're looking for channel rotation back up to those highs. And of course, I'm going to blend in a small channel, which should give me a lot more precision as far as where I want my entries to be. And again, of course, I'm looking for a nice pullback here, right, on the S&P right now. I'm also watching, though, as the market goes higher because, again, we get potential for a big short covering rally as we try to make that run back up to retest those highs from earlier on in the week. The bottom line is I'm going to put together a couple different scenarios here to get long on the S&P. I'll even talk about what a reversal will look like here on the Emini. Over on the Nasdaq is very similar here this evening to the S&P. Again, really set this thing up on a silver platter, right, from last night's newsletter. We talked about that hidden channel, right, in last night's newsletter. Now we've adjusted that channel. Beautiful, beautiful two-try failure into pullback. I mean, do we not talk about that setup? How many times we talk about that every evening on this newsletter? Oh my goodness. Always gives me goosebumps every time I see these things happen right in real time. The bottom line though is just like the S&P, we got of course that big bull channel, right? We're trying to get that rotation all the way up. While we're doing that though, I've got these two highs here. Line those two highs up, bring it off that low. Boy, oh boy, that would be a beautiful buying opportunity. I hope we get that deep pullback on the Nasdaq. We might not though, because with that short covering rally, with these sellers getting out of the way here right now, we may just keep on pushing. And if we do keep on pushing, I've got a great plan to capitalize on that short covering rally as well. So stay tuned on that. If you're an NQer out there, and of course, how about the yellow metal today? got rollover out of the way. This is the 619 contract on gold, right? Gold, literally, there must be some good news out there because gold was just, well, like it was tied to a cinder block and tossed in the river, right? Mafioso style. This thing was hella bearish here today. Very strong move down. Now, couple things, right? Couple things here on gold. One, anytime I see a strong move in one direction, we always expect to see a nice two-legged pullback and a retest of the low. I'm looking for some sells up inside that battle zone. Two, anytime we see such a strong move in one direction, anytime we see this much movement in one direction in one day, it almost always turns sideways. I'm going to put a plan together here for a range-bound market as we go into this triple threat Friday session tomorrow. And three, there are three things here I want to talk about here. We got that 87.5 out there. That 87.5 goes all the way back to the beginning of March. I believe it was March 7th or March 6th. It's almost like all of this time the price was building and building and building and then all kind of gave up on it here on rollover. The bottom line is, though, as we try to go lower, we've got a major level of support down here at that 87.5. So if we do go lower, I have a very specific plan on how I want to sell or how I want to participate right in this market. I'll even talk about what I'm looking for a reversal here going all the way back up into that 1300 big round number if we get that low at 87.5 hit here this evening or tomorrow morning. So we're going to break that down here on the yellow metal. If you're a gold bug, you're going to love tonight's video on gold. And then wrapping up tonight here on that euro. The euro, it's no surprise. We keep going back and forth from big round number to big round number, and here we are right around that big, you guessed it, right around that 13,000 big round number. I have a bear momentum into a trading range. I've got a hidden channel, and I'm going to talk about maybe 3, maybe 4 different ways that we can not only sell off that high, but buy off of that low. And of course, tomorrow, going into the Triple Threat Friday, I'll talk about when you want to sit on your hands and do nothing on this euro tomorrow. I'm going to break all of these charts down here in a lot more detail. We'll talk about gold, euro, NQ, ES, right, crude oil. Before we jump in and put together the plan for the Triple Threat Friday session, I want to make sure you never miss another video here. And to do that, just join our mailing list. To join the mailing list, head over to sidewaysmarkets.com. I'll put all the links in the description of the YouTube video. And all I need here is your name, your email address, and then hit that subscribe now button. And don't forget, when you subscribe there, your job is not over yet. You've got to go into your inbox, check your inbox, verify that you get the welcome email, because in that welcome email is going to be a verification link, and it's going to be filled with all kinds of goodies so you know how to get the most out of our time together every evening on this nightly newsletter. So don't delay. Don't miss any more of these great newsletter videos. Join our mailing list. That way you're always on top of every new development here on our blog at Sideways Markets. And one more thing, don't forget, tomorrow morning we're going to be in our trade room at 8 o'clock Eastern Time. I would love to have you there teaching it and trading it right there with me tomorrow morning with all of our clients. If you can't be there tomorrow morning, though, that's okay. The next best thing is to grab all the charts that you see me using in tonight's video. I'm going to have them attached right below the video tonight, right here on the blog at Sideways Markets. So get over here to the blog at Sideways Markets from the YouTube channel and grab those charts below the video tonight. And don't forget, while you're down there, while you're below the video tonight on the YouTube channel, drop me a comment in the comment section. If you have any questions, any feedback, any other video topics you'd like to see me cover, I am always listening to your comments. I'm always looking for feedback. What do you love? What do you hate about this newsletter? What would you change? And what do you want to see more of? Give me some feedback in the comment section. And while you're down there, if you love the video every evening, I put a lot of effort into these videos every evening on our YouTube channel. Give me a thumbs up if you appreciate the effort we put in every week here on this channel. And don't forget to subscribe to that YouTube channel. Hit that bell icon so you always get notified every time I publish something new. And don't forget, if you want to call me anytime, right? If maybe commenting in the comment section isn't for you, pick up the phone. Call that toll-free phone number. I would love to answer the call. I'm old school, right? I actually talk on my phone. Call that toll-free phone number. It'll forward right to my cell phone. I can answer all your questions. I'd rather have you get the truth from me than send you out there to Google land where who the hell knows, right, what's going to be on those websites out there. So if you have any questions, any help with brokers, data, charts, anything at all, call that toll-free phone number or drop me a comment in the comment section below. Sound like a plan? All right, let's roll those sleeves up here. If I had sleeves on right now, I'd be rolling them up. Let's get to work. We got some work to do. Tomorrow is a triple threat Friday. What do I mean by that? End of the week, end of the month, end of the quarter, right? All hell break. No, probably not that bad, right? Probably not that bad. But we have a very interesting session coming tomorrow. We don't have these very often. Think about it. When was the last time we saw end of the week, end of the month, end of the quarter? It was last year. Well, I guess it had to be last year, right? This is the first quarter of the U.S. All right. It's Friday. It's almost Friday, right? My brain can be a little bit lazy here every once in a while. So triple threat Friday, what does that mean for us? Well, it means, first of all, low volume, because a lot of people have already finished their work for the week, right? And it means extra volatility. Now, why extra volatility? Because remember, the end of the first quarter, why is the first quarter so important for traders? Because your performance at the end of the first quarter is your marketing material for bringing on new assets under management for the rest of the year. The first quarter is literally the most important 3 months of the year for almost every fund on the planet. And anyone who says differently is lying to you. They use these first 3 months of the year to build their portfolio, and they use that as marketing materials when they start handing out business cards, taking on new clients, right? These are big trading firms I'm talking about, right? Not people like you and I, but big firms who rely on assets under management, capital under management. So what does that mean? That means going into tomorrow's trading session, these big trading companies are going to be getting into new positions, getting out of existing positions. Why? To make their numbers look better, right? If I can close a profitable position that hits my percentage targets for the first quarter, I'm going to do that, and I'm going to do it as soon as I have a chance tomorrow morning. So volatility, right? Volatility. And oftentimes it'll feel like unexpected volatility as those big block orders start hitting the tape. Also, same time, tomorrow being end of the week, end of the month, end of the quarter, anybody who's up on the week, up on the month, up on the quarter, do you really think they're going to risk tomorrow morning giving any of that profit back? I hope not. Right? Especially big trading firms, especially if you work for somebody else, right? If you're a proprietary trader like we are at our trade room, right, that's not a big concern. But remember, we don't move these markets. What actually moves these markets are these big trading firms with billions of dollars under management, right? A lot of those traders are going to be on the sidelines into tomorrow's session. So when you put them all together, you get a cocktail tomorrow of less volume. It's a Friday, end of the week, end of the month, end of the quarter. Traders trading easy tomorrow. At the same time, traders who have no choice but to be getting in and getting out. And that oftentimes means a very chaotic trading session. Now, you know me, right? I am never somebody who will say, I don't trade these scenarios. I don't believe in that. You know, there's all these kind of old school trading tips, right? I don't trade rollover. I don't trade quad witching. I don't trade this. I don't trade that. We only get 20 darn trading days a month, right? You start picking and choosing which days you're going to trade, and you're not going to have that many days left to participate. So I never go into the session thinking I'm not trading tomorrow. What I do, though, is I always start each day with an optimistic mindset. I know exactly the plan. We'll use our 3-step strategy tomorrow morning, and we're going to have a great day. However, I am realistic. I know tomorrow I'm going to make sure it's early in, early out. Tomorrow's not the day to be increasing your position size, right? Tomorrow's not the day to go from sim to live. Most likely, there's probably an exception to that rule, right? But tomorrow's not the day to be sticking your neck out, trying to pick tops and bottoms, doing things that are unreliable or things you're not comfortable with. Whatever you're doing, keep it rolling tomorrow. Now, at the same time, as we get into tomorrow's session, I would expect the biggest opportunities tomorrow with traders getting in and out of positions to be right around this new home sales number. We got the Chicago PMI, we got new home sales, consumer sentiment, right in that 10 o'clock shock. You'll notice it's also really our last chance before we get this slew of Fed speakers tomorrow, late morning into the early afternoon. If I had to guess tomorrow morning, get to your desk early, get those charts prepped up early. We'll do it tomorrow at 8 o'clock Eastern time, but expect the big fireworks tomorrow to be somewhere between that 9:45 and 11 o'clock top of the hour before we head into the weekend. We do have news tomorrow at 8:30 Eastern time. I don't expect that to be too big of a market moving event. I expect, because of that triple threat session tomorrow, I expect traders to be cautious going into the opening bell and looking to perform into that 10 o'clock hour. And that's exactly what I'm trying to do tomorrow with all our clients in our trade room. 8 o'clock Eastern time, we'll be optimistic. We'll keep our eyes wide open. We're going to look for whatever setups we can get tomorrow from the opening bell to the closing bell. But if I had to guess right now, I would guess right now, save your bullets for that 10 o'clock shock, because we're probably going to see some big movements around that top of the hour. Let's dig right in. Now that we got the schedule for tomorrow, end of the week, end of the month, end of the quarter. Oh my goodness, it's gonna be a doozy. That is for sure. Let's break it open here tonight on the black gold, the Texas T, the oil futures. Okay, go oil, S&P, Nasdaq, gold, and euro on tonight's video newsletter. The first thing I always do whenever I open up a chart is I ask myself, is this a range-bound market or is this a trending market? What are we dealing with right now? This is a trending market with lower lows into higher highs. There's no ranges on this chart today. There was from yesterday. Obviously, we talked about this last night on the newsletter. I'm going to get to that in a moment here, guys. But right now, we have a trending day. Anytime I know we have a trending environment right now, I know there are three basic rules. One, I want to make sure I go with the market's momentum. Two, I want to make sure I find a channel. There's my channel. And three, I know that symmetry, or what we call measured moves, make for excellent targets. There's my measured move. So what's my directional bias right now? What is the momentum, right? If I was in a sailboat, what direction would the wind take me? Higher here, right? We're definitely bullish. If we're bullish, I want to buy at support. Where can I find a level of support? Well, I like to use channels. I'm lining up these two highs, and this may change here as we open up in Asia. I take those two highs, I bring it down to that low, and this creates what I call a hidden channel or a spiking channel. You could also, by the way, take that high and bring it down to that low too. It's not really necessary, but you could, right? You could easily take that, mark up that as another line here, bring that line down, and that would work too. Also as, right, a level of support as well. Okay, so now we know where we have our support levels. Okay, that's where I want to buy. I want to buy at a level of support here for tomorrow. If I can get long, though, where would my target be? My target would be, one target will be the measured move. But I'd be lying to you right now if I said that's all I expect tomorrow. We talked about this last night, right? I'll be very surprised here if we don't find our way back up to that big round number, and then possibly, right, all the way up to retest, right, those big March 26th highs up around that 60-40 area. Again, like I mentioned in the introduction, if it wasn't for Trump's Twitter finger this morning, what happened was he was complaining about the price of oil, and of course people just trade off those tweets now. So prices tanks down. But you'll notice that they rebounded right back up, right? Twitter can't keep it down, right? Twitter can't keep it down. It's always funny because people always ask me, can't people manipulate these markets? And I always tell people, think about OPEC, right? OPEC is probably the richest cartel in the world, right? I mean, probably the richest privately run group in the world. Might be, I don't know, maybe the UN instead. But OPEC does everything they can to control these prices, and they don't do a good job of controlling the prices. So it's very difficult to control any market very long. Apparently, though, Trump's got some pretty good pull, right? He mentioned that earlier this morning, and he needs to get some sleep, I'll tell you that much. This thing just tanks. Like, what time is it right there, right? What is it, 3 o'clock in the morning in D.C.? Anyways, the bottom line is they rebound off it. Nice strong move up. We're bullish I got my channel, I got my measured move. In my experience, when a market is trending, there are three basic things you need to prepare for. One is a pullback to support. Two is going to be the sideways range. And three is going to be if we keep going higher. So let's break those three down. We know where our targets are. We know we're trying to get to the measured move. We know the round number, and we know that 60-40 area all overhead. Those are our objectives. Now, let's talk about the first one. What if we pull back? We get that pullback, right? There are basically two types of pullbacks that I look for. One of them is called a two-legged pullback. And a two-legged pullback, just like the name suggests, has two legs to it. One leg and two leg. Now you'll notice once I see that two separate legs, I draw that trend line overhead. And now I can use that trend line as a level of support. We call these two-legged pullback patterns. They're very, very common, especially in trending days, right? My nickname for these are the 2LP. I want to see them down towards the low of that channel. Again, you'll see it, right? It's quite easy. You'll see it. One leg, pull back, two leg, draw the trend line over it, up and over, up and over. One very common mistake that folks make on two-legged pullbacks is they try to trade them like this. That's not going to work very well. When it comes to a two-legged pullback, you want to go up, over, and go. You want it to feel like those sellers sold into it. Make sense? Then once you get the pullback, then we look for that buy off that trend line. We'll talk more about the little nuances of the two-legged pullback instead of our members classes. But that's one pattern I'm looking for tomorrow. Now, what if we don't get so much drama, right? What if it's not that deep of a pullback? What if we just simply pull back to the low of this channel here? Okay, now, at that point now, moving average comes over, and I'm looking for two more patterns. One is called a failure pattern. Imagine now price pulls back below the moving average. The sellers here, what do? They think the market's bearish. What do? They try to sell off that moving average. Once I see those bears selling off the moving average, then what? Now I know exactly where their stops are. Watch out, your stops hanging out. I can buy into those stops now, right? Stops are hanging out right above those highs. Think about this, guys. Think about it for a second. I'm now buying at support. I'm also buying at a support level where at the same time, I can anticipate through a simple two-pull, right? Through a simple failure setup, I can anticipate now that sellers are going to have a big problem if the market goes higher. Short covering rally, sellers get stopped out, buyers now flood the market. So what a great place to be a buyer here. Buy at support where you know other buyers are buying, but then look for a pattern that would allow you to get in while the sellers are buying as well. So that sets up for what we call the failure pattern. Now, whatever you do, don't chase it higher. Don't chase that pattern higher. Wait for the pullback. This pullback is always a sneaky one because it fools you. It makes you think it's never going to pull back. And then sure enough, right, it almost always pulls back at some point for that follow-up trade. So there's two more setups, right? One's a failure, one's a breakout pullback. Okay, two-legged pullback was the first one. Second one's the failure pattern. Third one here, right, that is the pullback pattern. Now, let's keep going. That's if the market pulls back here for us. What if we go sideways up here, right? What if we're going triple threat tomorrow morning, right? What if the market gets paralyzed and goes sideways? Then what do? Easy. Take the size of that trading range, copy and paste it down, find a support level because of it. I don't have the information yet because we don't know about the range yet. But if I do see a trading range, right? If this thing starts going sideways on the screen, find that new support level, and then we use that same failure pattern. This time, it's a 1, it's a 2, it's a failure. Let the bears try once, make them try again. Once we see them try twice below the low of that range, I'm buying into their stop losses, buying low at a level of support, and again, doing it in an environment where the sellers are stuck and they've got to exit for a loss. The hard one now is going to be what if the market goes higher? Okay, I want to make this very, very clear. There's a very good chance here that with this bear market now quickly reversing, what's happening? The sellers, right? Sellers who have their stops hanging out above these highs, when those stops get hit, what's going to happen? Buyers. So this market may start getting very frothy. What I mean by that is short covering rallies are very common during these kind of large range-bound markets we're seeing this year. And what you want to remember is a short covering rally won't pull back, right? A regular bull market will go up, it'll pull back, it'll go up, it'll pull back, because it's the buyers who are buying this stuff up. When we have all the sellers who are getting out of their positions, they're the fuel. They are the gasoline, pardon the pun, right? And what will happen is it won't pull back. It won't pull back. It won't pull back. It won't pull back. It keeps kind of fluttering higher. When you see the flutter higher, that's when you know it's a short covering rally, because again, it's not the buyers buying this, it's the sellers previously who are currently in short positions getting out of those positions. And what are they doing? They're getting out as it goes higher, which is why it feels so weird. Trust me, these are not easy conditions to trade. Short covering rallies for a rookie trader is one of the most difficult ways to trade. But here's the best way to do it. Okay, look back here. Okay, watch this pattern. It's a strong move up. The sellers sell into it once. The sellers sell into it twice. And a trap low. This is the pattern. Okay, that's the pattern you're looking for now up here. Okay, we talk about this pattern quite a bit, right? It's the 2-try breakout. Strong move up, 1 try, 2 try, trap, and go. Why do we care about a trap? Why is a trap so important? Because I don't want to buy into a level of resistance. I don't want to buy high. But Joe, the market keeps going higher without me. Wait for the trap. You'll get one. Right? I know. The markets may not react when I want them to sometimes. That's one of the hardest parts of being a trader. So wait for that 2-try breakout. 1, 2, trap low. Boy, oh boy, we've covered a lot here so far. Last thing, how do we turn bearish? I know, I'm not going to bank on it. I wouldn't hold your breath for a bear market tomorrow. But who knows, right? Trump was able to move things around this morning. Maybe something crazy happens in Asia overnight. I don't know. How do we turn bearish? First things first, strong counter trend move. Second, pull back to the moving average. Third, strong move off the moving average. What do we call these? We call these 1, 2, 3 reversal patterns. Why? 1, strong counter trend move. 2, pull back to the moving average. 3, strong move off. Remember though, don't try to sell that first pullback, because guess what? It's going to fail most likely, and guys and gals right in our trade room will be buying into those failures. Okay, so don't try to take the bait there. Don't get hooked up on a sell right there. Wait for it to blast, then mark up that low, find the new hidden channel, and we're selling off the top of that, right, of that channel. Okay, these require some patience, because you don't want to try to sell it as it's going lower. You want to wait for that proof. Wait for that 1, 2, 3 proof, and then wait to smack it towards my target, back down to that 58.20 area, and possibly even lower. We'll see how we go tomorrow. All right, so far tonight, we've talked about the failure pattern, the 2-legged pullback, the 1, 2, 3 reversal, right? The 2-try breakout with traps. Oh my goodness, so many great patterns. I want to teach you more of my favorite patterns. More importantly, though, I want to show you real examples of all those patterns that I just talked about. And to do that, I've got hundreds of examples, all included with our free trading course. I'm going to put a link in the upper right-hand corner for you. I'll also drop a big red button right below the video tonight on our blog at sidewaysmarkets.com. Right? Grab that free trading course. Either hit the big button in the upper right-hand corner or the big red button below the video tonight. Grab that free trading course, because I want to teach you all about what I know about these markets. But I got to keep moving tonight because, well, this analysis isn't going to do itself, right? So let's keep moving. You grab the free course. I'll see you on the inside of our members section of the website. You guys are going to love that free course. I'm excited for you already. Let's keep going. How about some S&P right now? So again, the first thing I do is I ask myself, what type of day are we dealing with right now? Is this a trending day or is it a ranging day? It's a trend, right? We got higher highs. We got higher lows. Moving average is sloped. Perfect. Now, in a trending environment, what's the most important thing? One is to follow the market's momentum. We're bullish right now. I want to be a buyer. Where do we want to buy? We want to buy at support. Where's the best place to buy in a trending market? At channels, right? Channel low. How about this? 2 channels here. Line up this high, right? Take those highs, bring it down to those lows, and that's going to be my hidden channel low right there. But wait, there's one more channel here. Take those channel, right? Those highs, bring that down. That's the good stuff right there, right? So my trend here, right? My bullish trend tells me stick to the buy side, buy at support, and find a channel. And I've got 2 channels, one here and one there to sink my teeth into. But before I do that, though, I need to know where's my objective? Where are we trying to go? Because I don't want to just buy because I'm pulling back. What if we're already at the goal? What if we're already at the target? Where's the target? Well, in a trending market, markets love to use symmetry. 1 leg, 2 leg, those are almost identical. Something tells me, yeah, we're going to probably see some resistance, some profit taking up around that 28, 27.08. At the same time, right, I'd be lying to you if I said I didn't think there was potential to finish off that rally. We talked about this last night, right? Last night we talked about this, right? We said, all right, we're probably going to go back to retest those highs. We didn't get it today. Tomorrow looks very, very likely, though, to get back to that 28.35 and possibly, right, even higher from there. We'll see how we get there. Now, we know where our targets are. We know direction. There are 3 basic scenarios I always want to be ready for, right, when I'm trading a trending market. Up, down, and sideways. Brilliant, right? Brilliant. I know. I didn't say I was the smartest guy in the world. I just show up early and leave late and work really hard. That's always been my secret to success. So, first things first, bull market, let's plan a pullback. Right? Let's plan that pullback. I've got a lot of support levels here. Again, hidden channel low. That's the sweet spot right now I'm looking for. Okay, what's one pattern I could use? First of all, shallow pullback, right? Shallow pullback. Moving average comes over. I look for that failure pattern, right? Let those sellers try to sell off that moving average, right? It'll look like this. They go down. The bears try to sell off the moving average. Stops are waiting. Right? And they buy the stops. Then what? They pull back and they go from there. We see this pattern over and over again. Right? That pattern now, look for it here. Right? We pull back. Let those bears try twice. Up and over. Right? Up and over, and we go. Again, what it'll probably look like is that strong move down. Moving average comes over. Sellers try to sell off the moving average. That tells us exactly where their stops are. Now we know all their stops are right above that high. I can buy with the right signal right into those stops. Again, that is the failure pattern. Don't chase it though. Don't chase it. Right? You don't want to chase it because it almost always pulls back. You'll get a much better entry, right, by waiting a little more patiently there. And I'll tell you right now, patience is not easy. Patience, discipline, confidence, these are like muscles, right? They are. You got to use them or lose them. You know, I've seen this so much in my own personal trading career, and that is, it's so easy to get undisciplined. It's a slippery slope. Practice discipline, practice patience, practice again, you're building those muscles, right? Discipline is a muscle. You got to use it or you're going to lose it. You can't be lazy and do everything one day and the next day expect yourself to be a disciplined person. You got to build up to that. Just like running a marathon, right? You don't wake up one day and decide I'm going to run a marathon. Well, maybe you do, right? Maybe you're a freak, right? But most of us don't, right? Most of us, a mile will kill us, right? So we got to work our way up. Same thing true for discipline and patience. That's one of the big reasons why our clients love our trade room, because I make it very, very clear where and when and what we're looking for every morning, which makes it easy to stay disciplined and patient. Anyways, we're looking for that pullback, two-try failure, right, into that pullback pattern. Now, what if it's a much deeper pullback, right? What if it pulls back 1, 2, now what? Draw the trend line over. You got it. Two-legged pullback, right? The 2LP pattern as we go lower here. All right, there's 3 easy setups I'm looking for tomorrow morning here on the S&P. Next up, what if we go sideways here? Right? What if we go sideways? Either we're going to go sideways below it. What's more likely, though, is we go up and then into a sideways range around the measured move, right? That measured move being resistance. What if we go sideways here? If we start seeing that moving average flattening out, right, price starts going sideways, then what do? Take the size of that range, copy and paste it down. That's going to give you key support. Okay, grab that key support level and then wait for the failure. 1 try, 2 try, failure back up. Let those bears try once. Let them try to sell off the pullback. Then you know you've got the breakout sellers and the pullback sellers are all roped in. Bingo. Buying right into those stops. What else? What's the other option here? The break higher here. Now, this is one of those times where we have a measured move in the way of the top of the channel. Okay, so here's what you can expect. 1 strong move up. Now, what's going to happen at the measured move is you're going to see sellers enter the market, first being buyers just simply taking their profit, and second being sellers who are trying to fade off this high and go back down again. Okay, what I'm looking for here is I want to see that strong move up into the measured move, that same 2-try failure pattern. 2-try breakout pattern. 1, 2, trap, and go. That's the pattern you need up here because you don't want to buy high. You don't want to buy into that measured move, right? So let those sellers try once, let them try twice, and buy into it. Just remember, though, if we go up, we double top, it's not the same pattern. If it double tops the high, it's a range. And if it's a range, it's 1, it's 2, and go from there, right? You find that range expansion. But if we blast up here, we go to higher high now. Yeah, there you go. Higher high in price, perfect. Right? Higher high in price, mark up that low, right? Trap and go. And hey, if I can get it off the low of a channel, then great, right? But it's not totally required that we get that channel low. It would be a great bonus if we did. And then don't forget, how do we reverse? What's a reversal? A reversal would be the 1, 2, 3 reversal. Mark that low. Mark that low, mark that high, right? It's off that initial high up there. That's the hidden channel. And then you know exactly where your sweet spot is. Looking to sell, right, off that level. Where's my target? Probably back down to the big round number, 28. Where's the major low? Yeah, major low is going to be back down here at 27.91. That'll probably be where you're headed here tomorrow if these bears, right, take back over. Again, though, right, hopefully we get a nice big short covering rally and get some trades popping here to the upside tomorrow. Again, on the S&P and the Nasdaq, that 10 o'clock hour tomorrow is where you've got to make sure you're ready, right, willing, and able to participate because, again, with tomorrow being a triple threat, right, Friday, it definitely may be a bit of a sluggish start to the session as traders get their bearings. Over here now on the Nasdaq. Nasdaq is pretty much identical to the S&P. We have a trending environment right now. Trending environment tells me go in the direction of the market's momentum. We are bullish right now. I want to be a buyer. I want to buy where? I want to buy at support. Where's a good place to buy at support? Well, at the low of a channel. Mark up that channel high, bring it down to that channel low. That's a great spot to be looking for those buying opportunities. At the same time, though, just like we talked about in last night's newsletter of how we blended trading ranges together, right? I can also blend these channels together, right? This large channel tells me I'm going back up to retest the high of that channel. That's the big objective for that channel rotation. In the meantime, though, I've got this cute little channel here, right? I'll put it in pink, right? Cute little guy. We'll put that channel together off those highs, and then of course I'll bring it down to this low, and that creates the hidden channel. Now, guys, keep in mind, if this thing was to go higher here, that hidden channel now goes up as well. Right? So just be aware of that, right? Be aware of that. If this thing keeps going higher, I'm drawing this channel off of these two highs right here, right? So if this thing was to happen to go, then I've got to go in, adjust that channel, and we're still looking for the same basic idea, right? Buy off the low of that channel. It's a trending market. Go with the trend direction. It's a trending market. Buy at support, channel support. Where's my target, though? My target is going to be that measured move. 1, 2, 73.73. Now again, this target, this measured move at 73.75, there's a couple different things we're looking for, right? If it goes up into it, maybe it turns sideways. Got a plan for that. If it goes up and tries to push through, then we know what the plan is for that, right? Trap low and keep going, because again, we know this might get really, really interesting as these sellers bail. You know, imagine how many stops are sitting right up there right now, right? If we can get that 74, 74.05, 74.04 area, this could get really crazy and could run all the way back up, right? We might see another example of what happened right earlier on this week, right back up to retest those highs, right, with a short covering rally. So that's the idea here on the Nasdaq. I do want to buy as low as possible, but I'm realistic. We may not get a chance, right, to buy it nice and low. So I want to buy the pullback. This is very similar here to the plan, right, on the S&P. Clean the chart up a little bit here for us. If I can get that shallow pullback means look for that, right? Look for that failure. The failure pattern, of course, let those sellers try to sell off the moving average. Look a lot like this, right? Where they go down, they try to sell off the moving average. You know where their stops are. I mean, look at this pattern. Again, this is the pattern we talk about all day long, right? 1, 2, there's your stops, right? You're buying into those stops. You're not chasing after it, though, because you're waiting for the pullback to finish up the move from there. Right? Same thing. Now imagine this pattern right over here now tomorrow, right? We go up, we pull back. Moving average comes over. Sellers try to sell it, right? Because they're not watching the overall momentum right now. We then can buy into their stops. Don't chase after it. Look for that pullback, right? And buy it up from there. Right? And again, I want to repeat this again. I'm just simply drawing these out for you right now, but I've got hundreds of examples of these patterns, examples that we find every morning in our trade room as all part of that free course. Right? So grab that free course, because again, I can only do so much on this video tonight. I want to give you that deeper dive, right? And we do that inside the free trading class. So make sure you grab that on our website here at schooloftrade.com. So that's if the price pulls back. And again, right, if we get that much deeper pullback, draw that trend line over, up and over and go, right? We use that trend line. And again, remember guys, it needs to go up and over, right? You don't want to see it like this. These happen all the time where they grind, right? Stay away from the grinders. The grinders are really tricky because you don't know which one to take. You probably have seen a couple grinders before. Grinders are not fun. What you want to do is you want to go up, right? Up, and then right when it looks like it's never coming back, then it comes back. Bingo. That's the one you want right there, right? That up and over from there. Now, how about we go higher here? Right, we go higher. How about a higher to a range? You know the drill. If we go sideways up here, right? 1, 2, try failure pattern, 1, 2, and then buying up from there. You'll learn all about these patterns inside the free trading course. And then what else we got here? What if it jumps, right? What if it jumps? Strong move up, right? 1 try, higher high, 2 try, trap, and go. I know I'm repeating myself a lot on this right now, but they're all the same patterns, though, all the same stuff. All right? And remember, guys, to be a great trader, you don't need to know everything. You just got to know a couple good setups, right? Just learn this pattern, failure pattern, right? Into pullback pattern. You learn that pattern, failure pattern, right? Pullback pattern. You learn that pattern, you're going to learn enough to survive off of this. And again, what's always so great about trading is that, and I'll never forget when I did this many, many years ago, when you boil it all down to a couple key core setups, what happens is you gain traction, you start to see the charts better, your high winning percentages make you money, you build your confidence, and what happens then? You become disciplined and patient to wait for those patterns. When you master a couple key core patterns, not everything, but when you master a couple key core patterns, you start opening yourself up now to seeing more. It's really amazing how life works. When you simplify things down, it actually gives you the brain power to see more. If you try to trade every single pattern covered in every single book you bought on Amazon the last 10 years, no wonder you're not being confident. No wonder you're losing money. You're doing too much. You know, the jack of all trades, master of none. Literally, it's called jack of all trades, for crying out loud, right? Apparently, they were thinking about us traders. So focus on a couple key core patterns. You know, that's why I repeat myself a lot in this newsletter, because if it's the same market conditions, these patterns repeat themselves over and over again, and there's no need to overcomplicate them. Learn a couple key core patterns, and you'll be amazed. Once you see consistent results, right, like I help my clients in our trade every morning, once you see those consistent results, all of a sudden now you'll start seeing, well, wait a second, there's another pattern right there. And there's a different one there. And all of a sudden you begin to get your arms around new patterns, and you can expand from there. Last but not least, the Nasdaq. How do we reverse? Reversal. 1, 2, 3. Remember, guys, just because the market pulls back does not mean we're bearish, right? They got to pull back. They got to hold, right? Pull back, got to hold. If you don't hold, we're going to go right back up again. Okay? Not every pullback is a reversal. It's got to pull back. That sets the table. Then up to the moving average. Then strong move off, right? Mark up that low. Mark up that low. You got it. You got it. You got it, right? And we're selling off that high. All right, guys? Wait for that failure. Wait for the reversal. And again, watch that price that goes higher here. We may see this thing really, really blast here for tomorrow. Okay, over on the gold right now, I'm running low on time. I know I took up some time at the beginning talking about the triple threat. So let's jump into gold here. The yellow metal, we made it through rollover. Okay, we're on the 619 contract now on gold. A very big volume day today on gold. It felt like everybody got out of their positions on gold today, and the market slammed lower. There are ultimately, let's see here, 1, 2, 3. There's a couple things. First of all, anytime I see a market, this is a trending market, right? Ask yourself, what type of market condition are we dealing with? It's a trend. It's not a range-bound market, trending market. So I want to go with the trend direction. We're bearish, obviously. I want to use my channel. I'm marking up my channel, right? There's my channel. It's a spiking channel. I'm gonna talk more about that in a moment. Okay, and where's my target? Measured moves. 1, 2, 3. Okay, so anytime I see we don't have a range, I know it's a trend. When I know it's a trend, direction, channel, measured move. Again, you'll learn a whole lot more about this inside the 3-step strategy in that free trading class. All right, guys. Again, upper right-hand corner or the big red button. Okay. Most important thing right now, though, is anytime I see a strong move in one direction. Okay. Anytime I see a strong move in one direction, I almost always get a second leg. Okay. So right now, very strong move. Anything now that pulls back is probably going to be sold. Okay. Anything that pulls back is probably going to be sold. Now, how do we structure that? We structure that by using a spike and channel. Why spike and channel? Because spike and channel patterns, as I believe we talked about earlier this week, spike and channel patterns are really cool patterns because they tell me pretty much precisely where to look for the entry. Take the first pullback and the base of the channel. That creates kind of the sell zone overhead. And this is not just this spike and channel, but anytime you see a spike, pullback, lower low, draw that channel, right? That creates your channel. Now, from there, find that new, right? Find the first pullback, find the base of that channel. And I'll tell you right now, that is where the sellers are waiting on these spike and channel patterns, up and down from there. And of course, the pattern you can use is, right, the failure, you guessed it, pull back and back down again. Okay? So now we go back to that chart now. There's my channel. Right? There's my sell zone or my battle zone, right, that I call it. I call it a battle zone because when the market goes up like this, the buyers and the sellers are going to battle, right? The buyers will try to buy that pullback. Okay, the sellers are going to try to battle away from them and sell right into those stops. Okay, I learned a long time ago, one of my first trading coaches said, he said, Joe, the best money you're ever going to make is right before the market reverses. The best money you're going to make is right before the market reverses. The problem is that most rookie traders, myself included, my hands raised too, I used to be too scared to trade that. Or even worse, I would buy it. Thinking, oh, it's gone too far, right? It must be a bull market. It's not a bull market until what? Till they hold it. So this happens a lot with spiking channels, right? It's this big move down. The market jumps up. The buyers go, see, I told you it's gone too far. See, there's some random pivot down here, right? Who cares? It's a bear market. Buyers now, of course, think it's gone too far because they see the whole big move down. And they go, ooh, perfect. We're going all the way back up. But what happens then is it fails and it goes right back down to that low, right? And again, this is nothing more than that simple pattern, right? That failure into pullback back down. Okay? So anytime I see a strong move in one direction, I expect to see a pullback and a retest of that low, second leg. Now, one more of those types of rules. Anytime a market moves this far in one session, okay, it's a pretty big move for gold. It's a pretty big move. Okay? Anytime a market moves that far in one session, we also start thinking the following day's a range. That's the next thing I want to think about here. Okay, so I know the spiking channel, but honestly, the spiking channel might get gobbled up by a trading range here. We already know how to trade a range. If you follow my newsletter, we've talked about this many times already this week, but just in case you're here for the first time today, size of the range. Now, right now, again, I'm guessing right now. I don't know how big this range will be. All right. I get a lot of questions every day, by the way, on how we find the right ranges. I teach all my tricks and secrets about finding the right ranges because finding the correct range will determine where my level of resistance is up here, right? So how do you know where the best level of resistance is? You need to learn how to find the right range. It's not top to bottom. I'll give you that, right? All my secrets, all my tricks are all covered inside the members classes. Right, when it comes to finding ranges, I give away a lot of my tricks, right, inside that free trading course, right? I'm definitely not giving away everything in there, but I give you enough for a new trader to stop the bleeding and start finding some great setups. And of course, my job with that free course is I want to get you primed and ready to trade with me in the trade room. See, what I do in that free course is I train you so you're ready to come in and make some money with me in the trade room as a client. All right, we'll talk more about that in the free course. If we go sideways here, right? If we go sideways here, right? As we go sideways, find that high and what pattern? The 1, the 2, and the failure. Let the buyers try once, let them buy the pullback, and we'll sell into it. Okay? So now we got two scenarios. One is a spiking channel. One, of course, is the range-bound market. There's one more here. Okay, the low of the month, right? The monthly low, 1287.5, right? This is March's low. Okay, big deal. Okay, price pretty much went all the way up and now come all the way back down. Why is it important to know March's low? Because we have to assume that's the objective. We have to assume that's where these bears are trying to get right now. So if we think that's what they're trying to get right now, as the market goes lower, what's the problem? We're selling too low. How do I avoid selling low? There's two things I'm looking for. One is a strong move down, a trap to finish off the move. If you can get a strong move lower and get that trap before we reach the measured move and before we reach that low, that's your pattern. However, just like we saw on the euro earlier this week, if the market runs without me, what usually happens at a measured move? We almost always see the market bounce, moving average comes over, oh, and you guessed it, failure into pullback and back down again. Buyers try to buy the pullback, they fail, we're selling into their stops, we're selling the pullback from there. So you see the difference though? The difference is if we can get it here quickly, right? If we can get a trap quickly here, we can take that trap, right? Traps are the best entry setups when you don't have a lot of open space. Okay, we talk about traps on the S&P and the Nasdaq as the market's going higher. This would be a trap high because you got that measured move right in the way. However, if this thing keeps going and doesn't give us a trap or the pullback, time out, don't sell into the support. We'll see some profit taking. The moving average will come over. The buyers will have their shot for their 1, 2, 3 reversal. If they get it, right? If they get it, then we'll buy it. I have no problem being a buyer, but you've got to show me some proof. I'm not going to buy just because I think the market's gone too far. If it was that easy, well, it's not that easy. So get out of your mind, right? Because the market's gone too far, it's not enough for me to be a buyer. I have to wait for that 1, 2, 3 reversal. Okay, we talked about that a few times already tonight. Okay, then buy that low. But anything else besides that 1, 2, 3 reversal, it's one up, nope, failure, down, and back down we go, right? Failure, pullback. Again, don't sell into the low, wait for the pop up. Buyers try, they fail, and whoops, bottom drops back out of it. So now you know the plan. You know what a reversal looks like. You know if it goes sideways, if it goes higher. I think the only real concern I have tomorrow on this gold is that big round number. You know, we might get something like this where it kind of jumps around here and then up and then sits sideways, something like that. If that's the case, buy low, sell high. If we start sitting sideways around that big round number, 1, 2, buy it up. 1, 2, sell it down. Just keep fading those breakouts. And of course, we'll know more tomorrow once we get to the trade room tomorrow morning, if that's to be the case. All right, wrapping things up here now on this euro. The euro's pretty straightforward tonight. We've got a bear market into a trading range. So now, like I said earlier, every time I start my day, or in this case, finish my day here, I start off by asking, what type of market conditions are we dealing with? Is this a range-bound market, or is it a trending market? This is a range-bound market. It's pretty easy to see the moving average flattening out. We got lower highs. We got higher lows. This thing is curled up, right, and nice and comfortable around that 13,000 big round number. When I have a range-bound market, I always want to make sure I find the range correctly. Again, you can learn more about my range tactics inside of our members classes. I also cover a lot of the details in that free trading course. Once I find my range, I add the range expansions. Expansion above, expansion below. This is a relatively small range, which means I like to use 2 range expansions. If this range was larger, right, I would use just 1. Does that make sense? Okay? So I get a range-bound market, plot the range above and below. That is support to buy, and that is resistance to sell. Now, how do I choose direction? I look at my bias. Is there a directional bias before we hit that range? There is. Now, why is that important? Because it tells me the right types of patterns to use in a range-bound market. Since I know I have a bear market, I know that I can be relatively aggressive selling off the high, but if the market goes lower, I've got to be a little bit more patient before I buy off that low. And that's because of the overall momentum. Now, the last thing it tells me is exactly, right, what not to do, and that is mess with the middle. Stay away from the middle. Buy low, sell high, avoid that middle like the plague. So now that we know our plan here, now we know the bear market into a trading range, I want to sell off the high. Okay, what are some easy ways to sell off the high? 1, we go up. Again, think about this pattern, right? Think about that pattern. 1 try, 2 try, failure, pull back, go. Did I mention that pattern happens all the time? It does, right? 1 try, 2 try, failure, and go. That's the sequence. That's the combination off that high. Again, you can be more aggressive selling off that high. What about buying off the low? Strong move down. How do we buy now? Okay, there are 2 patterns I'm watching for off of this low. Here's the best one. It's called a crown reversal. Okay, crown reversal. Watch closely. Strong move down into the buy zone. Oversold, right? Below that low. Sellers will get caught chasing. Okay, let those sellers try again. Now remember, the market's bearish overall. So being a buyer into that failure isn't enough. What's going to happen is they're going to come in and try to do it again. And that's exactly what I want to see. Trap low, reversal. That's the buy right there. Okay, watch again. Strong move down, right? Don't chase it. Strong move down. Let the bears try to sell off the moving average. Okay, let them try. Again, don't try to buy that yet because it's not a bull market. It's a bear market. The bears are not going to give up that quickly. They're going to try again at a higher price. And when they do, watch that low right there. Watch that low, because that low is where all the action happens, right? That's where you want to buy off it. You want to buy right off that low, right? Nice big strong signal and whoop, right back up. All right, guys, that's the ideal pattern as we go. That pattern becomes even more important if it does something like this. Right? If we run lower then run back up now we're buying very high here. So now I really got to make sure I get that trap. You see the difference there? I can be a whole lot more aggressive if I get this pattern back here because I'm buying really low. But if this market jumps up like this, right? Oh, watch out, right? Now, if I try buying now, I really got to make sure I'm buying really low. That's why the trap is so important if it jumps back up. Again, we'll put all this together tomorrow, right, in our trade room, and we'll do it together, right? Stay away from that middle. 1, 2, back down. Stay away from that middle. 1, and then again, a little more patience off that low. What's a breakout look like? What's a breakout look like? Strong move up. 1 try, 2 try, breakout, right? Strong move up, real strong. Right? Real strong, like, whoa, leaning on the keyboard strong, like desk, right? Leaning on my desk, like, whoa, big, strong break higher, right? What'll happen is it'll come up, it'll go just below that moving average. 1, 2, trap, go. That's your buy. Very strong move, very strong move. That's the key to the breakout going higher. Okay, everything else, yeah, 1, 2, 3, reversal. Sure, that's also a bull reversal. Mark that. Mark up. Mark up. Buy that low. Right? This is a very similar pattern. It's more pronounced. Right? It's strong move up. 1, 2, go. Or up, back, run. Channel, pull back, go. All right, guys, don't forget, lots of examples of these patterns inside that free course. Grab that big red button below that video. And don't forget, what are you waiting for, right? What are you waiting for? We're open up tomorrow morning, 8 o'clock Eastern time. Triple threat Friday, end of the week, end of the month, end of the quarter. My goodness. We're going to have a great day tomorrow like we do every morning in our trade room. I hope I see you there with me. Don't forget, if you're not quite ready for joining me every morning, grab that free trial right there to the left of me here on the homepage. As part of that free trial, you'll get a free pass. Come out and join me as a guest in our trade room. You'll get access to that free trading course, and you'll learn all about what we call our 3-step strategy that we teach and trade together every morning in our trade room. What a great week it's been. Boy, the month of March. See ya. We'll see you in April, right? First of the month next week. No April Fools on Monday, all right? I'm kidding with you. Hopefully I'll see you tomorrow morning. If not, I'll see you guys same time, same place on Monday evening's newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? Enjoy your weekend, too. And we'll see you next time. Adios, amigos. Bye-bye for now.